Hello, welcome back to this channel. So today would be walking you through the profit margin analysis for Guinness Nigeria Plc. So Guinness Nigeria Plc is a firm that's under the beverage industry, and they produce drinks actually. So and their products are quite famous across Nigeria. So today we'll be taking a glance through their net profit margin analysis. So the profit margin analysis is basically a financial analysis technique that is used to evaluate a company's profitability by examination. So it helps us basically to analyze if a company's financial level and profitability. So and also further helps us to assess the company's ability to generate earnings, to manage costs and maintain profitability. So if we if we are able to observe a company's profit margin over a period of times, maybe a period of quarters or period of years, and if we observe the movement of this metric, we can see that we can see the ability and the efficiency of the company to generate its earnings, to maintain its profitability and manage costs. And this would also be a very vital information that can help us to make investment decisions when it comes to that company of interest. So this company we're dealing with today is Guinness Nigeria Plc, and I hope we have thrown a little light to what the profit margin is. So basically, profit margin is just the difference between what a company got as revenue and the expenses. So after the expenses for the product or the service has been accounted for, whatever is left. So we want to see in comparison to the revenue, what is remaining, what did they get, what percentage of the revenue did they have to keep as their own profits. So taking a quick look at the data set here, we could see here that this data is spanning for the space of 10 years from 2014 to 2023 here. So 2014 to 2023. So you could see how it's actually moved over the year. Fortunately, they had a very high profit margin in 2019, and it's happened to drop over the years, though. We'll find out on the charts. And so to get this profit margin, we just divide the net profits by the revenue, and then we multiply by 100, and then we get this profit margin. So that's actually that on that regard. So moving real quick to the data. So this data are measured in percentage. So the horizontal axis actually represent the profit margin percentage, and the vertical axis represent the years, and the years are indicated here in the middle. So this point is this middle point is the 0 point. So anything to the left means that they had a negative profit margin, and anything to the right means that they had a positive profit margin. So let's move real quick. So checking to 2014, we saw that they began with a profit margin of 9%. That means from the revenue they got for that year, 9% of that amount was theirs to keep. And what they had here, according to the chart that we have here in 2014, they had a revenue of 109.2 billion naira. So 9% of that was actually theirs to keep. In 2015, they experienced a slight drop. It wasn't as much. They got 7%. But then we have to be careful with comparing comparing one year to the other, because in the data set we could see here that although in 2014 they had 109, but in 2015 we see that the revenue has increased. So most times the revenue might have the profit margin might reduce, but the revenue is much. So if we take the percentage of both, we could see that, oh, is either it's even still the same, or even despite the fact that it's lower, it is more than what they go for the previous year. So now, unfortunately for them, in 2016 there was a 2% drop in the profit margin that they got. So it means that, yeah, the revenue that they had, they lost that 2% of that was what they recorded as loss. Now in 2017 there was a slight recovery where there was a 2% increase. So that was how they went. We could see the fluctuations across the years, the ups and the downs. And then I think there was a big blow on this company in 2020. This we can attribute to the COVID-19 pandemic. Probably people didn't have to go out to drink. Yeah, they were, gatherings were reduced to the barest minimum in order to curb the pandemic, and we could see that took a toll on this company's sales. And we know that the sales of this product is actually tied with events and all that, and we know that the government actually curbed and reduced events and gatherings to the barest minimum in that year. So that took a negative toll on this company, as this chart indicates. So in 2021 there was actually a kind of recovery, although it wasn't much, but then at least there was no loss for that year. So in 2021 their profit margin was 1%, and in 2022 they were up again, having 8% profit margin. And then unfortunately in 2023 the profit margin dropped by 8%. So what they invested, they actually didn't get, they actually ran a loss here. So what this is actually saying is that basically, okay, let's just look at what are the factors that could have affected this drop in 2023. What could have sponsored this decline in 2020? Because we see that in 2022 there was 8% profit margin, and in 2023 they had a negative of that. So yeah, there are various factors that we can attribute this drop to. Number one is the change in administration is a major factor. The Naira redesign is a major factor. Also the purchasing power of the people has been reduced, and then also the cost of this product has been reduced. So these are the major contributors to these declines that we see here in this video. So basically that is almost all about this video. So we could see here that in the lowest profit margin that they had here, which is negative, they actually didn't really have that, but then we will also say is the least was in 2020, and the highest profit margin they had was this lowest profit margin was negative 12%, so minus 12%, and then the highest they had was in 2014, which is at 9%. So now what does this profit margin actually says to investors? So a high profit margin actually indicates a company's ability to generate earnings and sustain profitability, making it an attractive investment opportunities. So as an investor, what you have to look is, are these people's profit margin high enough for investment? And then that can also actually sponsor whether you're going to invest in that company or not. But if it is low, then come on, you just have to find your way and get a better place to invest in. Also, if you observe the profit margin to be improving over time, it suggests that there is actually effective cost management and efficient operations, which is indicating that a company is being well run, so they have operational efficiency. And if it is otherwise, it means that, come on, this thing is nowhere on there. Maybe there is mismanagement or otherwise. So also it shows that if there's a high profit margin, it can indicate a company's ability to maintain or increase prices without losing market share. So for companies like this at Guinness now, maybe if they increase their prices, it might actually reduce their revenue. And once you see that, you know that, these people actually do not have a pricing power, and So but if they actually increase their price and they still make sales, it shows that they have a strong demand and they have a competitive advantage over their competitors. Also, a consistently high profit margins compared to industry average or competitors may indicate a sustainable competitive advantage. So it's not just per period. It means that okay, this is sustainable and they can always replicate this over the years. So that is actually that about these videos, and let me leave you with this. So investors can use profit margin analysis to assess the financial health. In summary, so this is the summary of everything that investors can use the profit margin analysis to assess the financial health, the competitiveness and the growth potentials of a company, making informed investment decisions based on the insights that this profit margin chart is actually showing. So for Guinness Nigeria Plc, yes, initially they started well, but then the fluctuation is actually threatening, and I think there has to be a rethink when one wants to invest in such a company. So that will be all for this video. I hope I was able to cover everything, and if you have a different point of view, please feel free to drop a comment in the comment section. And if you like this video, please do not forget to click the like icon, and also ensure to subscribe to this channel so that you can get more insightful videos like this. Okay, that will be all for now, and then until I see you again in my next video. Bye bye.